Hello and welcome to After the Close. My name is James Boyd. Alongside me and my good friend Connie Hill in the chat. We welcome all of you here today. This class called After the Close, there's the bell. And this is really a class really for 30 minutes. And it's really done with the specific intent that someone has, and I'm going to use the language they say, I have a regular job. How could I do this in like 30 minutes if that's the most time I had for the entire day? So today I really want to kind of talk about some of the tools we actually have, okay? When we talk about that, I'm going to talk about using the Thinkorswim software. I'm also going to be talking about mobile as well, whether it's a phone or a pad. And I'm also going to be talking about order types as well. So everything we actually talk about, this should be something if someone says, look, I have 30 minutes tops for the day, how do I actually kind of be able to be thorough but also be confident as well that with what I'm practicing could try to set me up to try to ride some of these trends and or manage a portfolio. So I want to kind of show you that here today. Now, just real quick as we get started, remember with what we discussed is done for example, illustrative purposes only. Options carry a high level of risk if you were to consider those. And also remember when we talk about investing, it involves a risk and also including loss of capital. Our examples will be done on the Thinkorswim, the paper money software application. And also remember, I will show some links here today that I will share and bookmark those as I share those. So really our goal here today is we want to look at some potential trade examples, sure. When we do that, I want to talk about conditional orders. And I want to ask you a question. When you invest, are you reacting or are you actually having a pre-planned strategy of something that you've thought out ahead of time? Now, don't worry. If you said, James, I'm reacting, join other investors. Okay, you're not alone. And so the biggest actually thing is we want to kind of, some of the things we react to, sure, but we also want to kind of have some thoughts ahead of time going into the next day. Now, we'll talk about some of these summaries here, kind of with some of the market activity and trends, look at some of the technical analysis, and show how do we actually do this example given in 30 minutes or less. Just briefly. Now, by the way, I want to kind of show something to you. I did actually some mobile demonstrations. And obviously, in the world we live in, mobile is very important, okay? So the link I sent to you is a playlist. And you know that you could download the Thinkorswim app, whether it's Google Play or it's the App Store. I would really say that these classes that I did, most of them are 20 minutes or less. I would go through each one of these and make sure they're screenshots. They're actually live videos of a phone demonstration and an iPad demonstration. Whether it's a phone, and I'm not just saying Apple products, okay? It could be Samsung as well. Give love to all people, okay? And also the iPad, very critical. The iPad is probably maybe a little bit more incredible, or a tablet, just because with no thicker than a tablet of paper, so much power right in your hands. So make sure that you actually bookmark what I said and go through these and just say, are you proficient, okay? Because sometimes you're not always gonna have a computer. Closest thing to a computer is probably going to be a tablet. Second thing closest to that is going to be a phone, okay? But functionality very similar. Now, let's take a quick look at just very quickly, where did the markets finish here today? Now, the one thing I want to kind of say that I noticed near the end of the day that I thought was kind of interesting, if you look at like the NASDAQ, and again, something when we're actually saying, look, I got 30 minutes tops, if you're not using this functionality, this is why it's taking so long, okay? So number one is have your watch list synced to the charts. If you click on where, now if you said, I don't have that, click on it and make sure the list is number one and the chart is number one. When you go to the trade tab, if you actually see that it's not number one, click on it, make sure it's number one. Because when I actually click on these on the left-hand side, here, what it's actually doing is it's rotating through the list. Now here's the deal. You don't even have to click on it, okay? You could just click on it for the first time, and what you're now gonna see is if I click on it, you're now gonna see that it pulls up the NASDAQ, and if I had a keyboard, if I just click the up arrow, it's changing, okay, the list please do not type in the symbols. Okay, please don't do that. And so what's happening now is you're going through that list and you're just clicking one key. Now, a lot of us, what we like to do is when we find something that stands out to us, you can go control spacebar. And if you go control spacebar, what that really does is it puts a check mark and it highlights that line. If you're using Apple, it's command spacebar. So that way, going into the previous day or after hours like we are now, you say, hey, here are some of the charts going into tomorrow that are kind of interest to me. And how do I get it off? Do control spacebar and it unhighlights and unchecks it, okay? So those are kind of some quick things. Phone, tablet, and actually making sure the charts and the trade tab, they're synced. All right, game on now. Now, when we talk about kind of some of the things we're seeing right now, the Dow Jones opened up a little bit lower, rallied back, closed up another 100 points. I've been saying since last Friday the word grind, okay? Some of the most nastiest, and I mean this in a good way, some of the most nastiest, beautifulest uptrends are the ones where they don't necessarily smash higher, but they're just grinders. It just meaning they don't pull back much. They don't go up a whole lot, but it's just kind of a slow 45-degree angle to the upside, which is what we've been having. Dow Jones, we actually see that overcoming what happened with the Boeing chart this morning. You're going to see the SPX. You see a piercing line candle right back to the upside. And one thing I'm going to notice also on the MACD that I think is kind of that stands out, you don't normally see the MACD doing this after a big, long, extended rally. We have the MACD, it's actually increasing the momentum, okay? And we want to kind of see that continue and even have the MACD go green again. That's an unusual chart that you don't normally see when something's been up and the MACD is rotating like a bullish divergence back to the upside. That's unusual. NASDAQ, same thing. You go back and actually look at that chart on the bottom, down, little grind higher. Momentum building, even though we're up near some highs. Up near highs or trading at highs does not mean it can't go higher. New highs are the trend investor's best friend because a new high, that actually means an uptrend. All right. Now, so when we take a look at markets in general, pretty positive. The big thing we would also say that I didn't say earlier today is if we type in CNX CGI, is when you take a look at interest rates, they drop down a little bit. Now, so some sectors that are more interest rate sensitive, that'd be interesting to look at, like utility staples, potentially healthcare, non-biotech, okay? So here we are 5 minutes in, and we already have an idea that the NASDAQ is still pretty bullish, so is the SP, so is the Dow. I did not bring up the Russell, but if I brought up the Russell really broke out. Could it be at a potential bounce spot here today going into tomorrow? Okay, Russell's still been pretty positive. And the last chart I'll really bring up is the US dollar. And if you take a look at the US dollar, that actually did break down. We've been talking about it for days now, some of the commodities going long. So in 5 minutes, I have a kind of an idea. Equities are still pretty bullish as well. You want to bring up one more chart, the VIX, which was at 16 yesterday, 1636 to be exact, or 23, did hit a fresh new intraday low recently. We saw the VIX go up a little bit today with Boeing's news, but not necessarily breaking out of resistance. The key word is yet. Sector-wise, when we actually take a look at this, again, doing this all in 30 minutes or less, when you take a look at, let's say, sectors, now again, it would sure be helpful if you had your list. And by the way, if you said, well, James, I have a tablet, can I, for example, go to my tablet or my phone, whatever it is, and could I, for example, let's say, just have the list there, click on that list, and it populate the chart? The answer is sure, okay? That would be easy to do, and you could do it on the phone as well. Now, the biggest actually thing is when I click what was kind of different today, we saw gold up pretty aggressively, utilities trying to fire back. That's the interest rate sensitive area that borrows a lot of money to actually do capital projects. Could utilities start to bounce here? That technology we actually talked about, which almost hit a brand new high here today, not retreating back from the high. We said interest rates, right? Well, here comes, or I should say, and down the stretch comes healthcare. And if you take a look at healthcare, some of you have been watching to see, can healthcare fire back to the upside? We're going to swing back to that in just a moment. When you look at the energy, just real quick, intraday bounce, okay? Now, we're going to spend the next 20 minutes. And so from what we talked about, equity is still bullish, rates dropping down, volatility actually falling down, so is the dollar, okay? Interesting backdrop. Now, with the sectors, we got gold, precious metals, we got technology, you got utilities firing back, healthcare pushing to the upside. This is not just one or two areas of the stock market. We can't say that nonsense, okay? And if you look at energy, it's even getting involved in some financial stocks. All right, so with the 20 minutes we have, that's going to kind of be some of the areas that are probably going to be showing. Now, there's probably going to be more areas than not. Now, what I want to do is I want to pull up just real quick a stock like JP Morgan. Okay, the market is closed. And we pull up this stock and we say, you know what? I work a regular job. I don't know. When people say that, I'm like, what do you mean a regular job? Okay, like what does that even mean? Okay, now, so here's the thing. If we take a look at JP Morgan, we have like on the right-hand side an ascending triangle. Now, if we're going to be doing this and like putting orders in the after hours, let's say at night, after dinner, play with the dog, watch your favorite TV show or webcast, et cetera, et cetera. And also, if you take a look at this, you might say, James, I'm going to maybe put this order in the morning. Now, here's the thing. You realize you could just put the order in on your phone, right? You realize if you just grab your tablet, you realize you could just do the order in the morning as well, okay? Now, we know that the stock market is open at 9:30 Eastern officially, but we know that some investors could trade pre-market and just do what's called extended hour trading, okay? And I'll share with you a link on that where I detailed what does that even mean, okay? And it was a very thorough video on different types of orders in the pre-market, how to evaluate liquidity and so on. Now, here's the deal. Someone might say, well, James, what type of orders might the investor practice if they said, I got 30 minutes and I want to see some setups? Now, if the investor said, look, I just want to get in here expecting that the stock might try to break out to the upside, we're going to right click on the chart. And what we're going to do in this case is we're going to right click on the chart, right click, buy custom, and we're going to go with OCO bracket. Now, here's the deal. In your life, you're probably not teaching a class where you have to go over it for 8 minutes and so on. You're just executing what you've been taught and then practicing. I'm not going to put my target yet. I am going to put the stop. And if we put a stop underneath today's low, about 265.14, I'm just going to take 265.14 less 2%, 259.83. I'm going to type that in right there, 259.83, dated GTC. And now what I'm going to do is going to put that target right there. Where's the target? Well, I'm going to go back right to the upside and say, look, where's the prior high? Right, probably right in the vicinity. Follow my cursor all the way over to the right, 278.87. I'm going to put 287.50, okay? Dated GTC. Now, we went over earlier about Goldman Sachs maybe leading the way. Could JP Morgan push to the upside? JP Diamond's been wrong so far. Said there was a high chance of recession. Well, eventually he'll be right, okay? He hasn't been right lately. Now, if we take a look at this, you're now going to notice target and a stop. There it goes, confirm send. And now remember with the stop, it's a trigger to sell. It's not saying exactly where it's selling at. You'd have to see where it fills, okay? Now, trade number one. Here we are, 13 minutes in. We looked at the indexes, looked at the sectors. Here's a stock example. This is really a buy limit order. The investor is saying a buy limit order when they're saying, look, I like the setup now, and I want to get in now. Now, let's say the investor puts in the trade at night. They wake up the next morning, the Dow futures are up 150 points. The investor remembers, I wonder if my JP Morgan order is going to be filled. This is where having a phone, a tablet can be helpful if you don't have a computer, and say, where is JP Morgan now? Because if the Dow futures are up 150 points, etc., there's a really good chance that JP Morgan, the stock price, could be higher as well. The investor might adjust the order. That's why you really need to know or want to know using the mobile platform to adjust that price. So if it jumps, you actually have a greater chance of trying to get filled. Okay. Now, any questions with that? Yeah, I didn't. Well, okay. I'm not even going to go there. Okay. So now I want to go back to just real quick another thing. Now, the one other thing I want to kind of pull up is a stock. So let's say, for example, you said, and I want to, so first off is limit orders. Limit order, you're saying, look, I want to get in here or lower. Now, I'm going to tell you, when I ask you a question, do you react to charts or do you have a plan? Okay. Now, what I'm going to do is I'm going to go to a stock called Caterpillar. Okay. Now, we really cannot say malarkey. Like, well, you know, there's so many stocks to look at. Well, yeah, there's a lot. You can look at a lot of stuff. Okay. But you realize almost all my examples this week came from the Dow 30. There's 30 stocks, and if you clicked on them, it wouldn't take you longer than 5 minutes, and that was if you were in slow motion, okay, and had dial-up internet. So the biggest actually thing is I want to kind of practice now and order like on Caterpillar. We hear all the time, old resistance becoming new support. Yeah. What's the trade setup? Well, you're going to see that really we had a red candle there. The very next day we closed above that. Now, I'm going to tell you right now, in order that people probably don't consider maybe perhaps potentially enough is a buy stop order. And it goes to the mentality is we have been brainwashed over and over and over and over for 50 years. Buy low, buy low, buy low, buy low, buy cheap. Okay, cheap as possible is better. Is it? Is it always better? Maybe it might make sense to, let's say, buy if it goes up, okay? So in order that I want you to practice 5 times is I want you to practice a buy stop and a buy stop limit. Here we are in the after hours. I only got 30 minutes. I'm going to put a little order right above today's high. Now this goes against everything someone's been brainwashed to do for 50 years. Buy cheap, buy cheap, buy cheap. But in the investing world, maybe the investor wants to try to buy the momentum and the trend. Maybe they're not trying to buy cheap. Maybe they're trying to catch, we always say the falling knife, but what about the shooting rocket? Right? Everyone talks about don't catch the falling knife. You could cut yourself. Well, what about something that's shooting to the upside? Wonder if it could keep going up. Wonder if it did. Okay? Now, what we're going to do is going to go buy custom with OCO bracket. We're going to go down to where it says limit. No. We're going to go stop limit. Now, what this stop limit is it's saying if we go to this price, so wherever you right click on that chart, right click, that's the price that it brings up. Can you adjust that? Sure, I'm going to do that. I'm going to say 362. So if we go to say 362 or higher, get in. If the investor does that, they're saying, look, I don't mind that, but I really want to try to maybe have a cap or ceiling on what I'm willing to buy the stock up for. Okay. Now I'm going to tell you in the last 3 months, at least 2, if the investor would have done buy stops, do you think they could have maybe had some potential gains? Probably, right? You're thinking if they rode any uptrends like Microsoft or whatever, there's a pretty good chance. But I'm going to tell you right now, in all the years I've done this, I think the number is 85% of people don't use buy stops, because they've been brainwashed over time that buying cheap is better, okay? But I'm going to push back on that nicely and say, well, maybe it's psychology. Maybe the investor wants to trade trend, but they're scared. Maybe they're scared to buy at a brand new high, because if you buy at a brand new high, maybe it could come crashing down. Well, I wonder if you bought it at a low at a potential support and it comes crashing through the floor too. You have to realize one thing. All entries have risk, all of them. So whether you buy at a high, you buy at what you think is a low, they all have risk. You buy at a high, you're going to buy less number of shares. You buy at a low, you buy a higher number of shares. What's the difference? It's risk on all of them. When you get that point, you'll stop thinking about lows and highs. Okay? Now what I'm going to do is going to go data GTC. We got a price. If it gets to that price or higher, get in. You're not allowed to buy at that. You can buy up to 363, but no higher than. The wider the spread, the greater the chance of entry. okay? If we open up at 361.01 and never come back down in that range, it misses the entry, okay? Now, what I'm going to do in this case is what about the target? Well, if I take a look at this target and kind of say, what's the next path of least resistance? 379, 388, and so on. I'm going to kind of put something in the middle, maybe like 384. Now, remember, we got 30 minutes. I ain't got forever, okay? GTC, dated GTC, there it is. Target, stop, and let's say we did an example given 100 shares, okay? So what you're now going to see is trade number one, we actually did JP Morgan. Trade number two we actually did was Caterpillar. And now what you're going to see is all these examples we've been talking about the whole week long have really come from the Dow Jones. Now, I want to kind of show something, if I can, is when you pull something up, and I'm going to show it to you on my iPad, okay? So what you can actually do, okay, and I'm going to kind of show you this as best I can, but what you're now going to see is here's the iPad, right? And if you're laying there in bed, take a break. You worked all day long, okay? Don't be so hard on yourself. Take a little break. And let's say the investor says, look, I got my tablet. They pull up the Dow Jones and they click on Microsoft. And what it's really doing is it's changing the chart to Microsoft. And they're laying down, okay? They're just sitting. We click on actually J&J and so on. And all of a sudden we start to kind of rotate through the list. Do not always feel like you have to be sitting on a computer after working a real job, so to say, for 8, 10, 12 hours. Use technology. Use technology, okay? It's right there for you to grab. So if you said, look, I like to look at a Dow Jones list, like to look at a sector list, click on it and rifle through that list, okay? I think sometimes maybe technology, we could almost be too slow with the adoption of it, I should say, and it's like we're taking longer than it maybe needs to really take. Now, by the way, how many of you actually use an iPad? Now, I'm a big fan of if there's a chart that stands out to me, I like to take a quick snapshot. That way the next day or whatever, when I'm looking at the markets, I go look at my photos and I remember, the euro, the gold, whatever it is, okay? I like to kind of remind myself that was a chart that I was actually taking a look at. Now, what I'm also going to do is I want to also go back to a stock, Amgen, for just a moment, okay? Now, let's say the investor says, you know what, James, I was at work all day, this stock went up a lot, and I feel like I missed the entry. Now, we've been talking about kind of like getting in now, limit orders. We've been talking about stop or stop limits. But what happens when you say, James, I wasn't able to see what was going on. I couldn't even look at my phone, right? Maybe I work at the Air Force, Colorado Springs, I'm a mile down below the surface of the earth. I can't have my phone. Well, all of a sudden, let's kind of look at the conditional order. We know a lot of times stocks don't just go up, they range, right? And if we looked at this, let's say we said, look, here's maybe a stock that might be trying to reverse, okay? Third example, inside 30 minutes, okay? And by the way, where's the Amgen? Well, if I pull up, let's say the Dow Jones, it's actually in the Dow Jones, okay? Now, if I take a look at this, let's say the investor says, James, I want to try to buy a little bit less, if I can. Okay, we're going to right click on that chart and go down to where it says buy custom with OCO bracket. Now, if we continue to see healthcare go back to the upside, could Amgen try to swing back to the upside? Now, I'm not putting the star on the top of the Christmas tree and saying I'm going to put a target at 335. Some of you are more of a realist from Missouri, and you might actually say, look, I'm thinking 318. So the investor put the 318 right there, dated GTC, and they put a stop underneath, let's say the intraday low. That intraday low is about 292.68, less 2%, and that's going to give us 286.82. 286.82, dated GTC. So we did the example of JP Morgan. We did the example of Caterpillar. We did the example of Amgen. We never even left the Dow list yet, okay? Now, what you're now going to notice is this is saying this price or less. Now, how many of you have ever said, James, I was trying to buy cheaper, but then the stock kept going up? Anyone else besides me? Okay, we've all had that happen. So wonder if the investor said, James, wonder if that pullback doesn't happen. Well, let's kind of use that price. And what we're going to do is we're going to change this to a market. We'll keep that day. We're going to go over here. Now, I think many investors have had good intentions. Look, I was trying to buy if it pulled back, but I just couldn't get in. What this is going to do is it's going to say buy at one of the two spots. A, if we pull back down to the midsection of the green candle, limit order, think of it, or conditional in this case. Secondarily, we're going to also say, look, if you get at or above today's high, which was probably right about, let's say, 298.5, buy at one spot or the other. Now, think about how many times that you could have been riding a trend if you weren't the most loneliest investor in the world waiting for the stock to come down. That doesn't ever seem to come down. And the trend goes by like Microsoft and it goes to the upside. And then someone asks the question, is it too late to get in Microsoft after it went up 30% in 30 days? So how do we stop that? Well, maybe the investor says, I'm going to get used to these conditional orders. Stop trying to always maybe consider buying cheap or low and try to actually use both sides of the trade. Example given. So if we look at this, we're actually saying, look, if you come back to the cheaper level, yeah, that's where the investor might try to get in. But if it doesn't, and that trend just goes up, back to the upside, the stock is going to buy at 298.5 or higher. Does it buy both? No, it's one or the other. Okay? Now, this order is very important because in the last 2 months, you've been waiting for pullbacks because your bear market friend said the market's going to pull back. These tariffs are going to crash the market. They've been wrong so far. Okay? It's been anything but that. Okay? This is why the investor would want to know this. Now, James, why are you getting so emotional about this? If you think about how much potential has been left on the table, oh, it's kind of is maddening, actually. Okay, there's a lot, and some of these things we're talking about can be adjusted and fixed if we just stop thinking that we're going to wait for the price to drop down so much and buy at lows. I think so much about investing is really kind of more about mentality, okay, than true trading practice or systems. It's mentality. Now, what you're going to notice is there's the target and the stop. We're at 27 minutes. I want to kind of just fast forward over a couple stocks in 60 seconds that also stood out as well. Now, the one thing is Amazon has been pushed down a little bit. Could that stock now went down for a day and then fired back to the upside? Some investors in the pre-market, they might be looking for a gap setup. That one might be an example to watch as well. Datadog, that is also one that is at a very sensitive area of resistance. Could that breach to the upside? There's nothing wrong with using alerts and saying, look, if we get at or above these highs, let me know on my phone, on my email, or anything like that. Let me know about that. An alert is not an entry to get in. It's not a buy stop. It's like an alarm clock. It's like a ring doorbell, if you will. Hey, someone's at my door. Or Datadog is at or above the price that I stated. Let me know if it gets at or above. Nothing wrong with using that at all. Now, the last one I'll just kind of make mention of, I don't normally bring up Gilead, but that's also a stock that if we take a look at that, kind of went down for just a smidge and then fired right back to the upside. Has a dividend coming out in the next couple of days, but pretty strong candle, and this goes back to the healthcare theme. We're 28.5 minutes in, 3 trades, looked at the indexes, saw the sectors, and 95% of all the examples came from the Dow. So why does it take longer than 30 minutes? People are looking at like the Russell 2000 stocks. So I'm out of my time here today. What I want you to do is I want you to go out and practice conditional orders. Buy limit orders, something that is setting up now, putting the order in the paper money account tonight for the morning. Second, I want you to practice limit orders at the midsection of green candles and seeing if they can fill. A part of that is practice if it's at this price or lower or this price or higher. So if it doesn't pull back to that level, that there's another way to try to participate in that trend. These order types, conditional orders, they're critical, especially in the after hours if you're not going to be watching the market. Now, the last thing I'm going to really bring up, the other piece of this is, if we were going to be a dentist, my golly, you'd want to know some of the tools of dentistry. If we're going to be an electrician, there's tools to be an electrician, and so on and so on. In our world of investing, having an understanding of how to use a phone, a computer, or a tablet, it might not even be miscellaneous. It's a way to connect to try to actually invest capital and manage positions. So I want you to go through these, start kind of at the first one, and then just go through them and say, are you crystal clear on how to use the phone and the tablet? And can you execute that in the paper money account, which you could also have the paper money account on mobile as well? Okay. I'm out of my time here today. Hopefully some of these things today really rang clear, I should say, and saying, hey, there's ways that I can improve, minor tweaks, but could potentially make a pretty big difference. Now, tomorrow, if we go to the Trader Talks channel, if you haven't seen this, Trader Talks, click on this. If you click on that, you're going to see there's a section that says post. If I click on post right there, we can now see that here we are after the close. Kevin's not teaching today because he's in Miami. Kevin and I normally teach Trader Talks tomorrow morning on ETFs. I'm going to ride solo tomorrow. So tomorrow morning, we're going to kick off ETFs, and you're going to see that is a visual schedule as well. So join me tomorrow. That class is not recorded, but boy, there's been a lot to talk about on ETFs. And also, Connie Hill, she also teaches the ETFs on Monday afternoon as well. So join her there as well. So remember, with what we discussed, it was done for example and illustrative purposes only. Hopefully you see that, if you have 30 minutes, it could be possible, okay? Our examples here today were more about potential entries. Not every day has to be entries. You might have positions you're looking at, but really 30 minutes is a sufficient amount of time on a daily basis to kind of look and see what's going on with your capital, okay? Now, also remember, with what we discussed, it was done for example, illustrative purposes only. Thank you, Connie, and thanks to all of you, and I'll see you back tomorrow, 9:30 a.m. Eastern. Don't be late, okay? And by the way, if you say, well, I can't be there live on my computer, get on your phone or your tablet and join us, okay? This has been the class on After the Close. With that said, have a great afternoon. See you back tomorrow. Bye-bye.